So I want to share with you 5 golden rules that took my trading to the next level. I've been trading over 10 years and these took me many years to learn. If you don't implement the last tip, then no matter how good of a trader you are, then nothing is going to change. And before I get to my first point, this video is sponsored by Blueberry Markets, and if you are looking for a broker, you can sign up with the link in the description below. So the first golden rule, okay? I stopped trying to be perfect. You know how on YouTube, social media, a lot of people are promoting this 99% win rate strategy, 90% win rate strategy, how to get a high win rate. Everybody on the retail trading industry is talking about high win rate. And over these past 2 years, I've met a lot of hedge fund traders, institutional traders, smart money, and read tons of books written by hedge fund managers, and I realized that all of them focus on this one thing, which is a super good risk to reward ratio. Basically, a minimum of 1:1 is a risk to reward ratio that you must have. In fact, a lot of top traders in the world, top hedge fund managers in the world, they have a risk to reward ratio of 1:3, 1:4, which is super good. And hence, they can make good money with a 55 to 65% win rate. So when you have a good risk to reward ratio plus very good risk management, you can have an imperfect strategy and you can still make money in the long term. So if it's that easy, that simple, then how come most traders still don't make money? Because the hard part about this is you need to have a strong trading psychology to implement this. A lot of people say, how do you lose weight? Exercise, eat well. But sadly, most people like to do what? Let me go find the perfect vitamin pill that I can eat so that I can lose weight fast. Sometimes it's the most simple, straightforward thing that is going to make you profitable. Second golden rule, I focus on trading smart instead of trading hard. So what do I mean by this? In my first 2 years of trading, I was a scalper day trader. Okay, there are profitable scalpers and day traders in this world, but it's just not me, because in my first 2 years, I was so busy scalping, day trading. I was staring at the charts for like 4 to 6 hours per day. And when I'm not staring at the chart, it doesn't end there. When I'm sitting on a dinner table, when I'm going out, I'm thinking about the charts, even though I'm physically in the shopping mall, but my mind is at my trading desk. And I was trading the super small time frames, you know, the 5-minute time frame, 1-minute time frame, 30-minute time frame. Because why? When you go to the daily chart, hourly chart, things ain't moving. Whereas on the 1-minute chart, a new candle appears every minute and it's moving non-stop. Isn't that more exciting? I have a friend who's a bank trader. The first thing that he said is the main mistake that most beginner retail traders make is that they focus on the small time frames. I know it's exciting, but if trading is giving you a lot of dopamine highs, then something is wrong. Good investing is supposed to be boring. Now, I'm not saying that so everybody should trade long time frames just like me. In my opinion, longer time frames just gives you more time outside of being a trader. You can do anything you want and let the markets work hard for you, and hence it is less stressful. And then the third thing, Pareto principle, 80-20 rule. 20% of your activities produce 80% of the results. And guess what that 20% is? Of course, risk management, like I said just now. Second thing, trading psychology. Every single day, beginner traders go onto my comment section. So, Karen, what are you talking about? All this trading psychology, risk management. How come you never give me trading strategy? Why you only talk about all this stuff? No trading strategy. Yep, no trading strategy at all. Don't become a trader if you are like that. Sometimes, the only thing you need to change is to focus on trading psychology. Not attend another seminar, read another trading book to find another strategy. I can give you a very good strategy with 80% win rate, and you can still lose money if your trading psychology and risk management is just down in the drains. And the fourth thing that I did, okay? So this is super important because on YouTube, which type of trading videos get the most views? Not those who has a finance background with proper qualifications. No, the trading guru that gets the most views on YouTube are those with good title and thumbnail and editing. That's it. Because why? I have a lot of friends who once worked with investment bank, Goldman Sachs, JP Morgan. They aren't getting views, not because they're no good, they're super good in what they do. Their title and thumbnails just aren't as good as those without any financial qualifications. That is, I don't know what to say about that. And this is why I focus more on my second channel, because this industry is hopeless sometimes. So what do I do all the time? I learn from the best, meaning people who has worked in a prop firm before, has worked as a bank trader before, has worked as an investment bank trader before, has a proper finance degree, hedge fund traders. These are people I learn from. Their videos might not get views, but I understand because I come from the industry. I understand that they know their stuff. And oftentimes you realize that these professional traders, they tend to talk about the boring stuff like the fundamentals, fundamental analysis, economic indicator, sentiment analysis, rather than the more exciting technical analysis, price action, which most retail traders love a lot. If you want to achieve the results of the top 10%, which is the smart money, then you gotta learn what they look at. Of course, charts are very important too, because it allows you to find a place to enter, exit. So of course, I still look at supply and demand zones, I still look at price action, but you need a lot more than that to generate a trade idea. I learn from the best people who know their stuff, not those people who have clickbaity titles, who has never stepped onto an investment bank trading floor, who has never ever talked to a single hedge fund trader. But you know what? Social media is social media. This is how it's like right now. Now this final tip, make sure you implement this, because otherwise the first 4 tips wouldn't work out that well. And that is to pick a broker that is on your side, that has no conflict of interest, so that it gives you more confidence for you to trade and that your funds are safe. So when you pick a broker, don't just look at the spread, the commissions. Doesn't mean that if they provide high leverage, low commissions, then no spread, then it's a good broker, because these are just things that brokers use to entice you to sign up for a new account. And one of the brokers still can consider is Blueberry Markets. They are regulated by Australian Securities and Investments Commission. And then they have 24/7 support. Their support so far, I've tested it out, is very efficient. And the withdrawals also are very fast. And you can trade over 300 plus instruments, which include forex, CFDs, commodities, and indices. And if you're kind of lost in trading, they also provide daily forex analysis. And also, most important thing, your money has to be safe. And they offer client money protection via a segregated account, so that all your funds are put in a safe place. It's not used for the broker's daily operational activities. When you put in a minimum deposit of $200, you will get your first trade free. So if your first trade is a loss, then you'll receive a refund of a maximum of $300 on your first trade. And if you want to learn more about how to pick a proper broker, I have a 10-step process for you. I'll put it somewhere in this screen so that you can check it out. And with that, talk to you in the next video. Bye.